In this video, we're going to be taking a look at the only two candlesticks you need to succeed in your binary options trading journey. As you all know, candlesticks come in all sorts of shapes and sizes, and there's all sorts of funny names for these candles. But at the end of the day, it's not about knowing the names of the candles, but rather knowing the reason behind why these candles form and the purpose that these candles serve. And today we'll be diving deep into two of the most important candlesticks that will take your trading career to the next level. So let's get into it. I've created an amazing group with over 750 members where I share profitable signals and tons of valuable educational trading content every single day to help you learn and grow as a trader. I've been leading this community for over 2 years now, and the feedback has been overwhelmingly positive. Now, the best part is it's 100% free to join. The link is in the description below or pinned in the comment section. If it's not for you, you can leave at any time. Let's get back into the video. So, the two candles we're going to be taking a look at are rejection candles and engulfing candles. These candlesticks are the most important candlesticks on the chart, and they are most likely the only ones you will ever need when trading binary options. And we're going to be diving deeper into the significance of each candlestick, what they are, why they form, and how you can implement them in your everyday trading. Okay, so we're going to start things off by taking a look at rejection candles, specifically bullish rejection candles. At some point, we will also get onto bearish rejection candles. Now, what exactly are bullish rejection candles? Bullish rejection candles are essentially candles that showed price try to drop, okay? But then buyers swiftly took control, driving price back up before or on the candle closure. So basically, the sellers tried to drive the price down, right? The bears tried to take control, but the buyers, the bulls stepped in, taking control and ultimately showing their dominance. Okay, now how exactly do you identify bullish rejection candles? It's very, very simple, actually. If you look at these four candles right here, they all have stuff in common. Straight off the bat, you'll notice that each one of these candles has a long lower wick. Check this out. And what else do these candles have in common? A small body. Each one of these candles has a small body. Keep in mind, the color of the body of the candle doesn't actually matter. It can be red, it can be green, it can be orange, it can be blue, it can be purple. You name it. It doesn't matter. In order for this to be a valid bullish rejection candle, the body of the candle must be at most 25% of the candle. So a small body, right? And the lower wick must make up for at least 75% of the candle. And this right here makes a bullish rejection candle. At times, you'll often find that some bullish rejection candles have upper wicks. Some of them don't. It doesn't make a difference. The long lower wick and the small body makes the bullish rejection candle. So let's recap on that real quick. A bullish rejection candle has a long lower wick, making up for at least 75% of the candle, with a small body consisting of at most 25% of the candle. And that's pretty much how you identify a bullish rejection candle in a nutshell. Okay, so now that we've taken a look at what bullish rejection candles are and how to identify them, what we're going to do now is take a look at what bullish rejection candles tell us. In other words, what they could potentially signify. Straight off the bat, bullish rejection candles tells us that there is buyer dominance. We obviously covered this in the very first point here, with sellers trying to drive the price down, but obviously buyers taking control, driving the price back up. And that is pretty much the definition of buyer dominance. Bullish rejection candles also tells us that there are signs of a potential trend reversal. Let's take a look at an example. Right now, we're looking at Euro USD on the hourly time frame. Now, I've gone ahead and marked out this yellow support zone right here. And this here is a high probability zone. The odds are that if price comes down into the zone, that it is very likely to respect it and reject off of it. And that's exactly what happened right here. Euro USD was in a clear downtrend, forming lower lows and lower highs, dropping all the way down into the support zone. And if we zoom in closer right here, once the price tapped into the support zone, you'll notice that we formed this bullish rejection candle right here. We've got a long lower wick and a small body. Because we're in a high probability zone, there is a very strong possibility that the price will bounce off this support zone. And this bullish rejection candle right here tells us that a trend reversal is very, very likely. And what do you know? Price ended up respecting the support zone, pushing to the upside, confirming the trend reversal. Another thing that bullish rejection candles signify are fakeouts. Let's take a look at an example. Right now, we're looking at euro to the Russian ruble on the 5-minute time frame. And you'll notice we're in a downtrend. Price is forming lower lows and lower highs. And I've gone ahead and I've marked out the support level right here. Many binary options traders use the support and resistance strategy. It's extremely popular, but every strategy has its flaws. In this case, you'll notice that we got a break of support right here. And for a lot of traders, this break of support is a confirmation to enter a sell position. But shortly after breaking support, price swiftly rejected back to the upside, forming a bullish rejection candle. We've got a long lower wick with a small body. Sellers tried to push the price down, but buyers came in, took control, ended up pushing the price back up. And it didn't stop there because the price ended up continuing to push to the upside. And this right here, people, is a prime example of a fake out. So, to sum it all up, bullish rejection candles shows us signs of buyer dominance, trend reversals, and fake outs. And that's pretty much bullish rejection candles in a nutshell. We've basically covered everything. So next up, we're going to take a look at bearish rejection candles. Next up, we're going to be taking a look at bearish rejection candles. What are bearish rejection candles? If you take a look at these candles in this example right here, you'll notice price tried to rise, but then sellers quickly stepped in, pushing the price down before the candle close. So in other words, buyers tried to push the price up, but then the sellers came into the picture, pushing the buyers aside, driving the price down before or on the candle closure. So how exactly do you identify bearish rejection candles? If you look to the left and you take a look at these candles right here, the first thing you'll notice is that each one of these candles have long upper wicks. Each one of them has a long upper wick. And what else do these candles have in common? A small body, right? Each one of these candles has a small body. And as we discussed previously, the color of the body does not actually matter. Now, if you look closely here, you'll notice a few of these candles have small lower wicks. Keep in mind that bearish rejection candles will sometimes have lower wicks, sometimes they won't. It doesn't actually matter. What matters is that the bodies of the candle remain relatively small. A bearish rejection candle is only valid if the body of the candle is at most 25% of the candle, and the upper wick must make up for at least 75% of the candle, and that makes a bearish rejection candle. So let's recap on exactly how to identify a bearish rejection candle. Number one, the candle itself must consist of a long upper wick making up for at least 75% of the candle. Number two, the candle must have a small body, making up for at most 25% of the candle. So a long upper wick and a small body. And that's pretty much how you identify a bearish rejection candle. Okay, so we just covered what bearish rejection candles are and how to identify them. Next up, we're going to take a look at what bearish rejection candles tell us, essentially what they mean. So from the get-go, the very first thing that bearish rejection candles tell us is that there is seller dominance. In the very first point, when we established exactly what bearish rejection candles are, we know that buyers tried to push the price up, but then sellers took control, pushing the price down. So when we identify bearish rejection candles on the chart, when we see them, we can keep at the back of our minds that there is seller dominance. Another thing that bearish rejection candles could signify are trend reversals. So let's go take a look at a real chart example. We've just jumped over to pocket option, and right now we're looking at USD CHF on the 15-minute time frame. And I've gone ahead and marked out this light blue resistance zone. And this is obviously a high probability zone, meaning that this is an area on the chart price is very likely to react from. So we know if price moves up into this resistance zone, it is very likely to respect it and move back down. Pay very close attention to the words I used. Very likely. There are no guarantees in the market. Now, if we take a closer look at this example, we can clearly see USD CHF is in an uptrend, forming this massive leg to the upside. Price ended up rejecting here, forming a small pullback to the downside. But we know USD CHF is in an uptrend, so any time after the pullback, the price is very likely going to move back up into the resistance zone I've marked out here. So shortly after the pullback, the price swiftly reversed back to the upside, pushing all the way up into the resistance zone. And the price respected and reacted from this resistance zone on multiple occasions, making this a very powerful resistance zone. On the first occasion, price moved up into the resistance zone for the very first time, forming this bearish rejection candle. We've got a long upper wick and a small body, telling us that there is seller dominance right here. And because we're in a high probability zone with that seller dominance, a drop off to the downside is very likely. And that's exactly what happened here. Shortly after the bearish rejection candle formed, the price basically plummeted. Now, on the second occasion, price ended up pushing back up into the resistance zone, forming another bearish rejection candle, right? We've got a long upper wick and a small body, telling us that there is once again seller dominance in a high probability zone, meaning a drop to the downside from this resistance zone for the second time is a very strong possibility, and that's exactly what happened here. This time dropping even lower, breaking structure, making this a clean trend reversal. Now, bearish rejection candles could also potentially signify fake outs, right? We can't forget about that. So let's go take a look at an example. So right now we're looking at CAD on the 1 minute time frame, and if you look closely, you'll notice I marked out this white resistance level. And for those of you who trade breakouts, this break of resistance right here was a confirmation to open a buy position. Now, if we take a look at the events that followed, shortly after the resistance break, price moved up quite nicely. It looked like a pretty promising move, but then all of a sudden, sellers took control, driving the price down, showing their dominance, forming a bearish rejection candle. We've got a long upper wick with a small body. And this right here, ladies and gentlemen, is a prime example of a fake out. Because ultimately traders that opened short-term buys on this resistance break would have lost. So my small piece of advice for breakout traders, those of you trading support, resistance, trendline breaks, is ideally to wait for a candle closure, a firm candle closure in the anticipated direction before opening a trade. Because entering a trade immediately on a break is extremely risky, reckless, and greedy. And my point is proven with this example of a fake out we're looking at right now. So at the end of the day, this is something you want to avoid. And that's pretty much what bearish rejection candles signify. If we skim over everything again, basically bearish rejection candles shows us signs of seller dominance, potential trend reversals, and fake outs. And I reckon that covers everything. This was bearish rejection candles in a nutshell. Okay, so we've just covered the ins and outs of rejection candles. You guys now know what rejection candles are, how to identify them, and essentially what they signify. And right now we're back on the chart. We're looking at USD JPY on the 4-hour time frame. I've scrolled back to a completely random place on the chart. And what I'm going to do is simply identify and highlight all the rejection candles I can see. So let's get into it. I think I'm going to go from left to right. And all I'm going to do is just mark out the rejection candles that I can see with my yellow pencil. There's a bunch of rejection candles here. Another one here. It's not my best artwork by any means, but it works. I may miss one or two, but as long as I get most of them, it'll be okay. I mean, there are a ton of rejection candles. Another one here. Another one here. Another one here. And I think this one here is the final one. I mean, you guys get the picture. Like I said, not my best artwork. I may have missed a few, but I know I've marked out the majority on the chart. But the point I'm trying to make here, people, is that you can identify rejection candles on all assets and on any time frame, ranging from the 5-second time frame all the way up to the daily time frame. Keep in mind, the higher the time frame, the stronger and the more significant the rejection candle. For example, a rejection candle on the daily time frame is a lot stronger and more significant than a rejection candle on the 5-second time frame. So just be wary of that. Now, when it physically comes to implementing rejection candles into your trading, you're not going to sit there like an idiot and open a trade just because a rejection candle formed. You're not going to sit there and look at a lonesome bullish rejection candle like this one and think to yourself, ooh, I think I'm going to buy. We're going to the moon, yeah? And you're not going to sit there looking at an individual bearish rejection candle like this one and think to yourself, yeah, I'm going to sell. Price is going to drop any second. Because doing this is highly risky and reckless, and you will likely lose money. Using rejection candles without a strategy or a plan is simply amateur. I mean, that's the best way to describe it. Don't get me wrong, rejection candles are extremely powerful, alongside other confluences. So my advice to you guys would be, start implementing rejection candles as part of your strategy. Start using them in your analysis and combine them with other confluences. Now, what confluences am I actually referring to? People, it can be absolutely anything. It can be order blocks, fair value gaps, support and resistance, breaks of structure. There are many more. But the concepts I just mentioned, I've created individual videos covering these concepts on my channel. And the best part is, you can watch them for absolutely free. So I highly advise you guys, once you've finished watching this video, to go and check them out. At the end of the day, implementing rejection candles into your trading the right way will take your trading game to the next level. So we've just covered rejection candles. And next up, we're going to be taking a look at engulfing candles. Now, you've got two different types of engulfing candles. You've got bullish engulfing candles, and you also have bearish engulfing candles. And what we're going to do is we're going to take a deep dive into exactly what engulfing candles are, how to identify them, and ultimately what they tell us. In other words, their significance. And we're going to start off by taking a look at bullish engulfing candles. So, what exactly are bullish engulfing candles? A bullish engulfing candle forms when there is strong buying pressure, right? The buyers are in control. There are little to no sellers involved in this move, telling us that the bulls are driving the price up. And you'll often find that a bullish engulfing candle tends to engulf the previous candle. Now, what exactly do I mean by that? You'll notice that I've gone ahead and drawn out this imaginary candle we have right here. Let's just pretend for a moment that this candle right here formed prior to this one. Once this candle formed and closed, you'll notice we got a push above the previous candle's high and a closure above it, ultimately engulfing the previous candle. So now we know what bullish engulfing candles are. When these candles form, we know that there's strong buying pressure. We know that bulls are driving the price up. There are little to no sellers present. And you'll often find that a bullish engulfing candle tends to engulf the previous candle, as portrayed in the example I just showed you guys. Okay, so now that we know what bullish engulfing candles are, we need to know how to identify them. If you look to the left, we've got two candles, okay? And these two candles have some stuff in common. Immediately, you'll notice that both these candles are green. Now, when you think of the word bullish, when you see the word bullish, you immediately think green, up, right? A bullish engulfing candle is always green, never red, never orange, never purple, never any other color other than green. What else do these candles have in common? Long bodies. Both these candles have long bodies. Now, if you look closely at both these candles, there is a small difference. The candle on the left has a small upper wick and a small lower wick, while the candle on the right has no wicks at all. With bullish engulfing candles, they come in all different shapes and sizes. Some of them have upper and lower wicks, some of them just have upper wicks, some of them just have lower wicks, and some of them have no wicks at all, like this one. So if a bullish engulfing candle has wicks or not, it doesn't actually matter. Now, what makes a valid bullish engulfing candle is the long green body. And the body of the candle must make up for at least 80% of the candle. And like I mentioned earlier, some bullish engulfing candles have wicks, some of them don't. Now, the ones that do, the wicks of the candle must make up for at most 20% of the candle. And that, ladies and gentlemen, makes a valid bullish engulfing candle. So let's recap on everything we just discussed. We know that a bullish engulfing candle has a long green body making up for at least 80% of the candle. And we also know that bullish engulfing candles have little to no wicks. Now the ones that do, the wicks must make up for at most 20% of the candle. And that is pretty much how you identify bullish engulfing candles. Okay, so we've just covered what bullish engulfing candles are and how to identify them. So next up, we're going to take a look at what bullish engulfing candles tell us, essentially what they could signify. Now, from the get-go, with bullish engulfing candles, we can pick up that there is buyer dominance. In the very first point, when we discussed exactly what bullish engulfing candles are, we know that there is strong buying pressure. The bulls are in control, driving the price up. We've got a long green body telling us that there is buyer dominance. Okay, so what else do bullish engulfing candles tell us? That there is very likely to be a continuation in the anticipated direction. Now, what exactly does that mean? So I've just jumped over to the charts, and right now we're looking at CHF JPY on the hourly time frame. Now, if we head to the bottom here, you'll notice we've got a bullish engulfing candle. Now, what makes this a bullish engulfing candle? Well, number one, we've got a long green body, a small upper wick, and a small lower wick. And also, we can see that this candle engulfed the previous candle, making this a valid bullish engulfing candle. And we know with bullish engulfing candles, there's buyer dominance. So the price is most likely going to continue moving up. In other words, in the anticipated direction, which is to the upside. And pay very close attention to the word likely. Another reminder, there are no guarantees in the market. And finally, bullish engulfing candles could also potentially signify trend reversals. So we're back on the charts, and once again we're looking at CHF JPY on the hourly time frame. And as you can see, CHF JPY is clearly in an uptrend, creating higher highs and higher lows. Now you'll notice after forming this swing high, CHF JPY pulled back, forming this short-term downtrend, which I've highlighted between these two pink trend lines. I also went ahead and marked out this support zone with this white rectangle, which the price ended up pulling back into. And as you guys know, a support zone is a high probability zone that price could potentially react from. So after price pulled back into the support zone, ironically, we got a bunch of bullish rejection candles. And obviously, we know the significance behind bullish rejection candles. It's the buyer dominance, right? Shortly after price tapped into the support zone, a bullish engulfing candle formed, confirming the buyer dominance and the trend reversal. And this is a valid trend reversal because the support zone was respected, and with this bullish engulfing candle forming, this tells us bulls are in control, so a continuation to the upside is very likely. Price ended up breaking above this downward channel I marked out with these two pink trend lines. Price also ended up breaking structure right here and continued moving to the upside. Okay, to sum everything up, bullish engulfing candles tell us that there are signs of buyer dominance, continuation in the anticipated direction, and trend reversals. And I reckon that's a wrap for bullish engulfing candles. I think we've pretty much covered everything. So next up, we're going to take a look at bearish engulfing candles. Next up, we're going to be taking a look at bearish engulfing candles. Now, bearish engulfing candles are basically just the opposite of bullish engulfing candles, right? Yeah, not quite. There's a little more to it, which is exactly what we're going to be diving into. So, what are bearish engulfing candles? If you look to the left, we've got a prime example of bearish engulfing candles. Bearish engulfing candles means seller dominance. Bears are in full control, driving the price down. And we also know with engulfing candles, they tend to engulf the previous candle. Now, if you look to the left here, I've gone ahead and drawn up this imaginary candle right here. And you'll notice that the bearish engulfing candle to the right engulfs the previous candle, because it broke and closed below the previous candle, ultimately engulfing it. So now we know what bearish engulfing candles are. Just to skim over everything again, when it comes to bearish engulfing candles, we know that there is strong selling pressure. There's seller dominance, bears are in control, pushing the buyers aside, forcing the price down, and often engulfing the previous candle, which usually in most cases triggers a sell-off. Okay, so now that we have a clear understanding of what bearish engulfing candles are, next up we're going to take a look at exactly how to identify them. Now, when we see the word bearish, we automatically think red, down, because a bearish engulfing candle is always red. So, if you look to the left, these two candles are prime examples of bearish engulfing candles, because if you look closely, both these candles have some stuff in common. Straight off the bat, we can tell that both these candles have long bodies. And the bodies of these candles makes up for the majority of the candle itself. We also know that engulfing candles have little to no wicks, not just bearish engulfing candles, but engulfing candles in general. Now, the candle on the left has a small upper wick and a small lower wick, while the candle on the right has no wicks at all. Some bearish engulfing candles have wicks and some don't. But at the end of the day, what makes a bearish engulfing candle is the long red body. In order for a bearish engulfing candle to be valid, the body of the candle must make up for at least 80% of the candle. And if a bearish engulfing candle has wicks, it must make up for at most 20% of the candle. And that, my friends, makes a valid bearish engulfing candle. So let's go ahead and skim over everything we've just discussed. We know that a bearish engulfing candle has a long red body. The candles to the left here are prime examples of what bearish engulfing candles should look like. We also know that the body of the candle must make up for at least 80% of the candle. Another characteristic here is bearish engulfing candles have little to no wicks. Now, the ones that do, the wicks must make up for at most 20% of the candle. And that is exactly how you identify bearish engulfing candles. Next up on the agenda, we're going to be diving deeper into what bearish engulfing candles tell us. So let's get into it. Obviously, we know with bearish engulfing candles, there's seller dominance. In the very first point, when we discussed what bearish engulfing candles are, we know that there is strong selling pressure. The bears are in control, driving the price down. There is little to no buying power. The sellers are at the wheel, forcing the price down. With bearish engulfing candles, there is also a strong possibility of a continuation in the anticipated direction. We've just jumped over to the charts, and right now we're looking at Euro NZD on the 15-minute time frame. Now, if you look to the left, we've got this nice swing to the upside, and shortly after forming this swing to the upside, we got a bearish engulfing candle that formed right here. And this is a valid bearish engulfing candle because we've got a long red body with a small upper wick and a small lower wick. And this candle also engulfs the previous candle. And we know with bearish engulfing candles, there's strong selling pressure. So there's a very strong possibility that the price will continue to drop off to the downside. It is very likely that the price will continue in the anticipated direction. And shortly after the bearish engulfing candle formed, there was a beautiful sell-off to the downside. In other words, a continuation in the anticipated direction. Okay, now bearish engulfing candles could also show us signs of potential trend reversals. As you can see, we're back on the charts. Right now we're looking at GBP JPY on the 30-minute time frame. And in this scenario, it's clear GJ was in an uptrend, forming higher highs and higher lows. And I've marked this channel out with these two white trend lines. You'll also notice I've marked out this resistance zone with this golden rectangle we have here. Now in this situation, GBP-JPY formed a beautiful swing to the upside, breaking structure, forming a new higher high. And shortly after forming the new high, price proceeded to consolidate and rejected to the downside, forming a pullback. Shortly after price pulled back, I marked out this resistance zone at the top of the swing high. And as we know, a resistance zone is a high probability zone. This is a strong zone price could potentially react from. After forming the pullback to the downside, price proceeded to push back up into the resistance zone. Now, in this situation, one of two things are going to happen. The price is either going to push right through this zone, forming a new higher high, or it's going to respect it. And here we can see price tapped into the resistance zone, respecting it and rejecting back to the downside, forming this bearish rejection candle we have here. With this bearish engulfing candle having formed, sellers have now taken control, and they will most likely continue to drive the price to the downside. And if you look at the way things played out, that was very much the case. If we look at the bigger picture, this bearish engulfing candle triggered a sell-off to the downside. Price ended up dropping, breaking below this light blue trend line, confirming the trend reversal and a continuation to the downside. Okay, so let's reflect on everything we've just discussed. We know that bearish engulfing candles signify seller dominance, a potential continuation in the anticipated direction, and possible trend reversals. And that, ladies and gentlemen, is bearish engulfing candles in a nutshell. So, we've just done a full deep dive into rejection and engulfing candles. You guys now know what these candles are, how to identify them, and what they signify. After covering the ins and outs, we now understand the importance of each candle and why it is crucial to start implementing them in your trading. The implementation of rejection and engulfing candles will take your trading to the next level. Once you start noticing and understanding the power of rejection and engulfing candles, it will be a complete game changer. But otherwise, I hope you guys enjoyed the video. I hope you found it informative, and I hope you learned something new today. And if you did, go ahead and smash a like on the video and subscribe to the channel if you are new, and I will see you in the next video.